Hey everyone, and welcome back to the channel. Today we're diving deep into the glittering world of gold and silver. For centuries, these precious metals have been a cornerstone of wealth, a safe haven in turbulent times, and a source of endless fascination. But what's happening with them right now? And more importantly, where might they be headed next? Stick around as we break down the latest trends, analyze the key market drivers, and explore what it all means for you. Let's start with the big picture. In recent months, we've seen some significant price movements in both gold and silver. A lot of this is tied to the global economic landscape. Think about it. Inflation concerns, interest rate decisions by central banks like the Federal Reserve, and geopolitical tensions all play a huge role. When investors get nervous about the economy or the stability of their currency, they often flock to gold as a store of value. It's a classic flight to safety move. So let's look at gold first. The yellow metal has been on quite a journey. We saw it reach impressive highs, driven by a combination of factors. One of the main ones has been persistent inflation. When the cost of living goes up and your money buys less, holding an asset like gold, which tends to retain its value, becomes very attractive. Another key driver is central bank buying. We're seeing central banks around the world, particularly in emerging markets, increasing their gold reserves. This isn't just a small trend, it's a massive, sustained demand that provides a strong floor for the gold price. They're diversifying away from the US dollar, and gold is their primary choice. This is a powerful long-term bullish signal. However, it's not all a one-way street. The biggest headwind for gold has been the strength of the US dollar and rising interest rates. When interest rates go up, holding non-yielding assets like gold becomes less appealing compared to, say, a government bond that pays you interest. This creates a tug of war. On one side, you have the fear of inflation and global instability pushing prices up. On the other, you have higher interest rates pulling them down. Watching the Federal Reserve's policy decisions is absolutely critical for any gold investor right now. Their language, their forecasts, and their actions will continue to be the primary short-term driver for the gold price. Now, let's shift our focus to gold's more volatile cousin, silver. Silver is fascinating because it wears two hats. It's both a precious metal, like gold, and a critical industrial metal. This dual nature makes its market dynamics incredibly complex and exciting. Like gold, silver benefits from safe haven demand during uncertain times. When gold rallies, silver often follows, but usually with more dramatic swings. This is why it's sometimes called gold on steroids. The gold to silver ratio, which measures how many ounces of silver it takes to buy 1 ounce of gold, is a key metric we watch. Historically, when this ratio is high, it can suggest that silver is undervalued relative to gold, and we've seen that ratio at some interesting levels recently, but the industrial side of silver is where things get really interesting for the long term. Silver is an essential component in some of the fastest growing technologies on the planet. I'm talking about solar panels, electric vehicles, and 5G technology. The green energy transition is hugely dependent on silver. A typical solar panel contains a significant amount of silver, and as the world pushes for more renewable energy, the demand for physical silver is set to explode. The same goes for electric vehicles, which use more silver than traditional internal combustion engine cars. This industrial demand is not cyclical, it's a structural long-term trend. The challenge is that while demand is set to skyrocket, the supply side is struggling to keep up. Mining output has been relatively flat, and discovering new, high-grade silver deposits is becoming harder and more expensive. This potential supply-demand imbalance is the core of the long-term bullish case for silver. So, what does the technical analysis tell us? When we look at the charts for gold, we can see a clear long-term uptrend. The price has been forming a series of higher highs and higher lows. We've seen periods of consolidation, where the price moves sideways, which is healthy. These consolidation phases often build up energy for the next major move. Key support levels are areas where buyers have historically stepped in, and key resistance levels are where sellers have taken profits. Breaking through a major resistance level on high volume is a very bullish sign, and that's something we're constantly on the lookout for. For gold, watching these technical patterns in conjunction with the fundamental drivers we discussed gives us a much fuller picture. For silver, the charts can look a bit messier due to its volatility, but the long-term structure also appears very constructive. Silver has a history of long periods of consolidation, followed by explosive breakouts. Many analysts believe we are currently in one of those long-term consolidation patterns. A decisive break above its multi-year resistance levels could trigger a very rapid and significant price increase. The key is patience. The silver market can test the resolve of even the most seasoned investors, but the underlying fundamentals, especially on the industrial demand side, are incredibly strong. So how should you think about all this? It's important to remember that this is not financial advice, and you should always do your own research and consult with a professional. But generally, many investors view gold and silver as a form of portfolio insurance. They can help hedge against inflation, currency devaluation, and economic uncertainty. A common strategy is to allocate a small percentage of your overall portfolio, say 5 to 10%, to precious metals. This can provide a stabilizing effect, especially when other assets like stocks and bonds are underperforming. When it comes to choosing between gold and silver, it really depends on your risk tolerance and investment goals. Gold is generally seen as the more stable, conservative choice. It's the ultimate safe haven asset. Silver, on the other hand, offers more potential for explosive gains but comes with higher volatility. It's a higher risk, higher reward play that's heavily tied to both monetary factors and industrial innovation. Some investors choose to hold both, capturing the stability of gold and the growth potential of silver. Another thing to consider is how you want to own them. You can buy physical bullion, like coins and bars, which gives you direct ownership and control. This is the preferred method for those who prioritize safety and want to hold the asset outside of the traditional financial system. Alternatively, you can invest through exchange-traded funds, or ETFs, which track the price of the metal. This is a more convenient and liquid way to get exposure, but you don't own the physical metal yourself. There are also mining stocks, which can offer leveraged exposure to the metal's price, but also come with company-specific risks. Each method has its pros and cons, and the right choice depends on your individual circumstances. Looking ahead, the outlook for both gold and silver appears very positive, especially over the long term. The fundamental drivers are firmly in place. For gold, continued central bank buying and persistent inflation concerns will provide strong support. The path of interest rates will be the main variable to watch, but many believe we are nearing the peak of the rate hiking cycle. For silver, the story is all about the impending supply crunch driven by the green energy and technology boom. The industrial demand narrative is just getting started, and as it becomes more widely understood, it could lead to a major reevaluation of silver's price. In conclusion, the precious metals market is at a fascinating crossroads. The interplay between macroeconomic forces, monetary policy, and technological innovation is creating a compelling setup. Whether you're a seasoned investor or just starting to explore the space, keeping an eye on gold and silver is more important than ever. They are not just relics of the past, they are critical assets for the future. Thank you so much for joining me for this deep dive into the gold and silver markets. I hope you found this analysis helpful and insightful. What are your thoughts on where gold and silver are headed? Let me know in the comments below. I'd love to hear from you. And if you enjoyed this video, please give it a thumbs up. And don't forget to subscribe to the channel and hit that notification bell so you don't miss our future updates. Thanks for watching, and I'll see you in the next video.